In our previous lesson, we presented various indicators regarding employment. In this lesson, we will discuss indicators related to consumption and business confidence. Regarding consumption, retail sales, or if you prefer, purchase of finished goods and services by consumers and businesses. By measuring consumer demand for finished goods, retail sales help gauge the pulse of an economy. It should be noted that the rates could be distinguished to headline rates, which tend to include a broader spectrum of products, and the core rates, which may exclude products such as automobiles and gas stations, despite that not being necessarily the end of the list. Overall, the rates are issued usually on a monthly and on a yearly basis, and an acceleration of the rates beyond market expectation tends to create support for the respective currency and vice versa. Then we have the consumer confidence indices. Consumer confidence indicators tend to measure the level of consumer confidence in economic activity. Basically, the indicators are formed by surveys used to measure the degree of optimism of consumers on the state of the economy. For example, in the Eurozone, the reading is compiled from a survey of about 2,300 consumers in the Eurozone, which asks respondents to evaluate future economic prospects. Higher readings point to higher consumer optimism. Overall, the degree of optimism or pessimism characterizing the average consumer in an economy may have an impact on retail sales and hence the contribution of the average consumer on the growth of the economy. Hence, should the reading be higher than expected, implying a greater degree of optimism, we may see the related currency strengthening, and the contrary will occur if the reading drops. Then we have business conditions. The current conditions or the business conditions indicators are compiled usually by surveys and are supposed to show what the current conditions on the ground actually are for businesses. They tend to show several slightly different variations depending on the economy surveyed and the organization performing the survey. They are released on a monthly basis, and higher than expected reading would imply improving conditions and could provide support for the respective currency, while drop beyond market expectations could weaken the respective currency as it is considered a negative sign. Then we have the economic sentiment. Economic sentiment indicators tend to measure the optimism characterizing businesses in an economy, usually over a short-term period, for example, the next 6 months. Should the indicator's reading show that businesses remain optimistic for the particular period in the economy, that tends to be a positive sign for the economy and thus its currency, and vice versa. In the next lesson, we will discuss other indicators to keep an eye out for.